Hello friends, there is a brand new tax deduction sitting on the books right now, and most seniors in this country have no idea it even exists. The government passed a new law in July 2025, added an extra $6,000 deduction just for people who are 65 and older, and then said almost nothing about how to actually claim it. And here's what makes it worse. The official announcement made it sound like Social Security would be tax-free for nearly everyone. But that is not what the law actually does, and millions of seniors were left confused. Today I'm going to cut through all of that, tell you exactly what this deduction is, who qualifies, how much you'll actually save in real dollars, and show you the one new IRS form you need to file, step by step. Before we get into it, rules like this change every year, deadlines come and go, and the agencies never call to remind you. So if you haven't subscribed yet, hit that button now and turn on the bell so you stay ahead of these things. Alright, let's start with the most important thing, what this deduction actually is, because a lot of people are mixing it up with something it is not. The government did not eliminate the tax on Social Security. That rule is still in place. Up to 85% of your Social Security income can still be taxed, and that has not changed. What they did give you is an extra $6,000 deduction. Meaning $6,000 of your income, whatever the source, is now shielded from being taxed in the first place. And that is a real benefit worth understanding. A deduction is not cash in your hand. It lowers the amount of income the IRS uses to calculate what you owe. And depending on your tax bracket, that translates to real savings on your actual tax bill. If you are in the 12% bracket, which is where most seniors land, a $6,000 deduction saves you $720 a year, and for a married couple where both spouses are 65, the deduction doubles to $12,000, which means $1,440 back in your pocket. Now let's talk about who actually qualifies, because not everyone does, and I don't want you to assume either way without checking your own situation. Rule number 1. You must have turned 65 on or before December 31st, 2025. So if you were born before January 1st, 1961, you are in the window for this deduction right now. Rule number 2. You must have a valid Social Security number. And if you are married and want to claim this, you must file a joint return. Filing separately disqualifies you completely. Rule number 3. This deduction starts to shrink once your income goes above $75,000 if you are single, or $150,000 if you are married filing jointly. And here's exactly how that works. For every $1,000 your income goes over that limit, the deduction drops by $60. So if you are single and your income is $100,000, that is $25,000 over the limit, and your deduction shrinks by $1,500, leaving you with $4,500 instead of the full $6,000. The deduction disappears completely at $175,000 for single filers and $250,000 for married couples. So if your income is above those numbers, this particular deduction does not apply to your situation. Now here is the part that really matters, the stacking effect. Because this new deduction does not replace anything you already had, it adds on top of it. If you are single and 65 or older, you already get a $15,000 base standard deduction plus an extra $2,000 because of your age. That's $17,000 before this new law even touches your return. Now add the new $6,000 senior deduction on top, and a single senior with income under $75,000 is shielding $23,000 of income from federal tax and paying zero federal tax on that entire amount. For a married couple where both spouses are 65 or older, the base standard deduction is $30,000 plus $1,600 each for age, plus the new $12,000. That stacks up to $45,200 in total deductions before you owe a single dollar in federal tax. That means a married couple living on Social Security and a modest pension may owe absolutely nothing in federal income tax for 2025. And that is a real number you can check against your own situation. Now, let's get to the form, because this is where most people get stuck, and I don't want you to miss this deduction just because of paperwork. The IRS created a brand new form for the 2025 tax year called Schedule 1A, and the senior deduction lives in Part 5 of that form. That is where you calculate and claim your $6,000. You attach Schedule 1A to your regular Form 1040 or Form 1040 SR. The 1040 SR is the senior-friendly version with larger print that was designed specifically for people 65 and older, and either one works. The form walks you through your income, checks whether you are above or below the phase-out threshold, calculates your exact deduction if your income is in the phase-out range, and then the total flows to your 1040 automatically. This deduction is available whether you take the standard deduction or whether you itemize. It does not matter which path you choose. You can still claim it, and that is exactly how the IRS wrote the rule. Now, what if you already filed your 2025 return and you didn't know about this? Are you out of luck? No, you are not. You can file what's called an amended return using Form 1040X, which is specifically designed to go back and fix something you missed on a return you already submitted. And many seniors are doing exactly that right now. Here is the timeline you need to know. This deduction applies to tax years 2025, 2026, 2027, and 2028 only. It is temporary. It sunsets after 2028 unless Congress acts. So this is a 4-year window, and you want to use every year of it. And before you worry about the cost of getting help to file this correctly, there are 2 programs that are completely free, and real people will do your return for you at no charge. The first is called VITA, Volunteer Income Tax Assistance. You call 800-906-9887 or go to irs.gov, and they will connect you with an IRS-certified volunteer in your community who will prepare your full return for free. The second is AARP Tax Aid. You do not have to be an AARP member to use it. You just call 888-227-7669 or visit aarp.org, and they have thousands of locations across the country with volunteers trained specifically in senior tax issues. These programs know the new Schedule 1A. They know the senior deduction, and they will make sure you claim every dollar you are entitled to. There is no reason to pay a preparer for this. Let's bring it all together so you can take action today and know exactly where you stand with this deduction. First, if you were born before January 1st, 1961, you turned 65 in 2025, and this deduction was designed specifically for you. So check your income against the $75,000 single or $150,000 joint threshold to see if you qualify for the full amount. Second, the deduction is $6,000 per person, $12,000 for a married couple where both are 65, and it stacks on top of every other deduction you already have, making it one of the most straightforward tax breaks added to the code in years. Third, to claim it, you complete Part 5 of Schedule 1A and attach it to your Form 1040 or 1040 SR. And if your tax software is up to date, it will guide you through the whole process automatically. Fourth, if you already filed and missed this, you are not out of luck. You can still file Form 1040X to amend your 2025 return and claim what you are owed. Fifth, for free filing help, VITA is at 800-906-9887, and AARP Tax Aid is at 888-227-7669. 2 real phone numbers, 2 real programs, staffed by people who know exactly what they are doing. Now I have one question for you. Leave it in the comments below. Did you already know about this deduction before today, or is this the first time you are hearing about it? Because your answer helps me know what to cover next. If this video helped you understand something you were confused about, share it with one person you know who is 65 or older, a parent, a neighbor, a friend from church. Because one conversation about this can save someone real money this year. Subscribe if you haven't already, hit the bell so these updates come to you before the deadlines pass, and I will see you in the next one.